counting on its gas and gambling companies to revive a state asset sales tied to €240 billion of foreign aid. The Hellenic Republic Asset Development Fund expects to receive bids for lottery operator Opap, gas monopoly Depa and grid operator Desfa by the end of April. The return will make up the majority of the €2.3 billion Greece needs to raise from sales this year. Privatisation Agency Chief Executive Officer Ioannis Emiris said, "There is no turning back. It's a programme that must proceed. It has been decided by law and has already begun. There's no stopping it." The programme has been inconsistent since international creditors, including the International Monetary Fund, pushed the government to promise €50 billion rather than €7 billion by selling assets ranging from island properties to airplanes. The plan is key to paying down a debt load which threatened to push Greece out of the euro last year. Greece has been locked out of bond markets since April 2010 and is the only nation to receive two bailout packages from the EU and IMF. Public opposition to pension and wage cuts sabotaged the pace of promised economic reforms, and loans to Athens were frozen in June as voter resistance to fiscal austerity grew. Anti-bailout parties gained support among Greek voters last year, forcing the suspension of asset sales. Progress has been slow, and the IMF warned in January the government needed to match results with rhetoric, calling performance so far extremely disappointing. Emiris commented, "Depa and Opap are the most important. If we make it with these two, then we will make the greater part of the revenue target." This year, Greece will raise about €2.6 billion and €2.3 billion will be from new sales, according to Emiris. Depa supplies gas to Greek households while Desfa operates the infrastructure to deliver it. Russia's Gazprom, the largest natural gas company in the world, is the most striking of the five bidders who have expressed interest in buying Depa. Greece has to deliver on state asset sales to cut a debt mountain peaking at 179% of gross domestic product this year and threatens the flow of funds from the IMF. Euro leaders have cut the cost of rescue loans for Greece, suspended interest payments for a decade and given the nation more time to repay. Emiris says one major challenge for building momentum in the programme was the shortage of money among local banks, which suffered nearly €40 billion of losses in the country's sovereign debt restructuring last year. Projects underway by the fund include sales of properties in London and Belgrade and the development of Hellenic, the site of the former Athens International Airport. That's all for now, but stay tuned to Dukascopy TV for the latest financial news and updates. Goodbye for now.